Assalamu alaikum. Today we're going to talk about Nio Stock. A lot of you have been asking me about my opinion on the halalness of the stock and its prospects as an investment, and so that's exactly what I'm going to cover in this video. Nio Stock has been on a tear as of late, for those who are unfamiliar. It started the year with a price per share at right around $3 per share, and now it's trading at closer to $30 per share, so it has 10x in the last 9 months. Nio is a Chinese premium car company, and it has been dubbed by some as the Chinese Tesla. I'm going to examine in this video the merits of this claim, and a lot of you may be familiar with my downgrading of Apple's halalness rating because of its association with some Chinese suppliers that have been implicated in the use of Uyghur slave labor. And I'm sure some of you are wondering what my stance is on Nio, as it is a Chinese company, and so I'm going to answer this question in this video. And without further ado, let's get started. So right off the bat, Nio as an electric car company is in the right business. And what I mean by this is most people agree that the internal combustion engine is on its way out. It's going the way of the horse and buggy. It's going to be replaced by electric cars. And this transition will likely happen a lot faster than many people anticipate. Already, I'm seeing through FundMeBFF, the halal financing company that I manage that offers halal funding in the United States, I'm noticing that by far the most popular car that customers are purchasing with the financing that they receive are Teslas. And I think that's for good reason. Very few of my financing customers are using financing to buy cars other than Teslas. And by the way, if you're an investor and you earn more than $200,000 annually and you'd like to invest with BFF, reach out using the link in the description below. Now, back to Nio. Not only is Nio in the right business, it's also in the right market. China is the largest market for electric vehicles in the world, and it is poised to continue to be the largest market for electric vehicles for the foreseeable future. Around 50% of all electric vehicle sales are made in China, and it is forecasted that by the year 2030, China is going to have roughly 70 million electric cars on its roads. So Nio is a young company in the right business and in the right market. Now, what else does Nio have? It has a lot of growth. Nio delivered 12,200 vehicles in the 3 months ended September 2020, which means that Nio increased its deliveries by 154% year over year. To put this in perspective, Tesla delivered around 140,000 vehicles during that same period, which is more than 10 times the amount of vehicles that Nio delivered. However, 12,000 vehicles is not a small number. It's nothing to scoff at. And when you consider the growth that Nio has been able to achieve, it's even more impressive. As of the end of June 2020, the following was true about Nio. Operating income for the past 3 months was negative 164 million. It had around 1.5 billion in cash. Short-term debt, which means debt that comes due within the next 12 months, was around 700 million. And long-term debt was close to 1.1 billion. So I wouldn't describe Nio's cash position as necessarily comfy. However, on the bright side, it's not close to death, which it was at the end of 2019 when it was about to run out of cash. Nio's interest expense for the last 12 months was around 60 million. Its total operating expenses were around 1 billion. So as a percentage of operating expense, Nio's interest expense was around 6%. So I do think that Nio is somewhat reliant on interest to operate. So this will definitely put a dent in my level of comfort investing in Nio from a halalness perspective. Having said this, I do anticipate that Nio's reliance on interest is going to decrease with time as its profitability increases, and it doesn't need as much debt to operate. For the first time, they reported positive gross margins in Q2 of 2020, but there's a long way yet to go until profitability. Now, in terms of competition, obviously when you're talking about premium electric cars, Tesla will come up as a main competitor, and Tesla is not an easy competitor to go against. In addition to this, over the last 3 years, there has been more than 400 new electric car companies established in China alone. So there's a lot of competition in the electric vehicle space, especially in China. Now, one of the reasons why I'm confident in my Tesla investment is that I always see Tesla on the bleeding edge of innovation, whether it's battery technology or autonomous driving or their manufacturing process. They always seem ahead of the pack. However, I can't say that I have the same confidence in the technological advantage that Nio has. It's not clear to me that Nio has a sustainable competitive advantage like Tesla does. Which brings me to valuation. Currently, Nio is trading at a valuation of around $40 billion, which means the price to sales ratio that Nio is trading at is close to 21. To put this in perspective, Tesla is trading at a price to sales ratio of close to 16. So Nio's valuation, if you're just looking at price to sales, is richer than Tesla's valuation. And I think this is somewhat consistent with what we're seeing in the market today, which is a prioritization of growth over pretty much everything else. It's almost like nothing else matters except for growth. So when you look at next year's growth projections for Nio, they're around 80%, whereas for Tesla, they're around 40%. And that seems to me why Nio is trading at a higher valuation in terms of price to sales than Tesla is. So I wouldn't say that Nio's valuation is crazy. It's certainly not like Nikola's valuation, which is one small fries away from a complete Happy Meal. It's not that level of crazy, but it is very rich, and it assumes impeccable execution by Nio's management team over the next few years. Now, there is one big elephant in the room as it relates to Nio's halalness, which is its level of entanglement and association with the Chinese government. It seems to me from my research that Nio's entanglement with the Chinese government is a rather strong one. At the end of 2019, Nio announced that its cash balance is not adequate to provide the required working capital and liquidity for continuous operation in the next 12 months, and admitted that its continuous operations depend on the company's capability to obtain sufficient external equity or debt financing. So what happened was, in the first quarter of 2020, it was essentially bailed out with a cash injection of $1.4 billion from the Chinese government, without which it would have probably run out of money. Additionally, JAC, the Chinese state-owned automaker, makes all of Nio's cars. This deep entanglement with the Chinese government makes me quite uneasy investing in Nio from a halalness perspective. People often forget that China is a brutal police state. Unfortunately, capitalism tends to be indifferent about the way it makes its money or where it makes its money. If there's opportunity to make money in China, well, that's where the capital will flow, regardless of pretty much anything else. I think this is rather short-sighted, and it's probably going to come back and bite us in the rear end. And as a Muslim, I want to have as little to do with these types of governments as I possibly can. Nothing against Chinese companies. I just don't want to be associated with the Chinese government in any way. Further, as an investor, I'm not really sure I can hold them to any moral standards or accountable to any law. I think dictatorships, regardless of what type they are, even if they claim to be Islamic, dictatorships are fundamentally in conflict with Islam. The Prophet, peace be upon him, says, "Ittaqu zulma فَإِنَّ الظُّلْمَ ظُلُمَاتٌ يَوْمَ الْقِيَامَةِ," which means avoid injustice because injustice is darkness on the day of resurrection. So this makes me uncomfortable investing in Nio from an ethical perspective. And when I look at the financial perspective, frankly, I see Tesla as a better risk-adjusted return than Nio is. For me, at least, the path to growth is much more readily discernible for Tesla than it is for Nio. In fact, I'll go further. The path to 10xing is clearer for me when it comes to Tesla than it is for Nio. Some people think that, oh, well, Tesla already 10x'd and therefore they've missed it. There's no more opportunity for growth. And they're looking for a smaller company to invest in where they can see growth more easily just because it's a smaller company. But I think this is probably the wrong approach. There's a lot more meat left on the Tesla bone, in my opinion. So I still think that Tesla is the play to make if you're looking to invest in the electric vehicle market. Now again, and as always, do your own research, make up your own mind. I am not your financial advisor. This is not investment advice. Take whatever you heard in this video as simply food for thought. If you're looking to buy stocks in the United States, then make sure to check out M1 Finance. If you'd like to support the channel, please do use the link in the description below. I'd really appreciate that. And I know a lot of you have been asking me to review trading platforms or brokerages that are outside of the US, and I promise this is on my list to do. So I will get around to that, inshallah. If you liked this video and you found it beneficial or thought-provoking, I'd really appreciate if you left a like. It helps a lot. If you're a new viewer, then make sure to subscribe. If you're not a new viewer and you're not subscribed, then what are you doing with your life? Get your life together. Subscribe for more content. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.